Hey everybody, good morning. It's about 8:45 in the morning here on the 29th of March 2022. What I would like to do today is to take a look at the Russell 2000. I'm going to do something a little bit different than usual. What I'm going to do is I'm going to do a little bit of an Elliott wave working session to try and make some sense of the chart here on IWM. There is a very bullish case. But then there's also a very bearish case. I want to take a look at both of those. Before I get into any of this, of course, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and get into the chart. Okay, so here we are. Let's take a look here at Russell. I need to make some slight changes here to my charts. Let's go ahead and get this down to size so that we can see everything appropriately. There we go. All right, so what I've just got a plain chart here on the Russell 2000. Nothing super spectacular. And from the top, what I want to do is I want to count this. I have the hourly. Let me go to, sorry, I was on the 30-minute. I want to go to an hourly here. A couple things that I want to discuss. The first thing, just basic support and resistance. I was just talking on the Discord about how if the Russell 2000 breaks 209, that's a significant reversal. And basically what that would mean, so let's just put this into perspective. What that would mean is all of this price action down here would be one huge bear trap. Okay, so with that, let's talk about why I say that 209 is so important. Let's just take a look here, right? So we're going to take about this level, approximately right here, at about 289. It really is about 209. So right there, that level, we've got lots of areas where we had previous support throughout this entire duration of, excuse me, of almost 2 years. This was significant support. Whenever we went down to 209, we had lots of support. We had a little bit of a pull down here initially, but it got bought right up. And then, we tested that 1, 2, 3, 4, 5 times over about a 2-year period. And then we broke through, we broke down. And since we broke down from that level, what we have seen a retest of that at least one time to kind of confirm that as resistance. We tested it a second time to confirm it as resistance. And now, pre-market, IWM is up at about 208. So that leads me to believe that we are more than likely going to retest it again. But if we do push through that, and if we can close, say, a daily above 209, that is extremely bullish if that is the case, if that's actually what's going to be happening here. All right, so let's go ahead and zoom in a little bit now that we have established our basis for why 209 is so darn important. Okay, so from the top, right, I can count this pretty easily, as a 5-wave pattern. We've got a little 1, 2, 3, deep 3, 4, 1, 2, 3, 4, 5. That's pretty clear that there's a 5-wave pattern there. And again, in this last wave, you can count a 1, 2, 3, 4, 5 to finish that. Okay, so after we get this 5 waves down, well, what do we have after that? We've got 3 waves. We've got an A, a B, and a C as an expanded flat. That works pretty well also. All right, so we've got, A, B, C to finish that. From the top then, we've got a 1, 2, and in this 1, you've got a nice little 1, 2, 3, 4, 5 waves down into 1, and you've got a wave 2, and then you've got, it's going to be hard to count, a 1, 2, 3, 4, 5 into the 3, and then we've got A, B, C into the 4, and then 1, 2, and then here's a problem. I can't get a clean 5 out of this. It almost looks like an ABC. Okay, so this is where things do tend to fall apart a little bit from an Elliott wave perspective. I mean, I could try and count a 1, 2, 3, 4, 5. I could squeeze 5 out of that, but it just doesn't look all that great. Okay, so this is where my problem then lies. So I have to resort to the potential that we could be in a 1, 2, 3, working on the 4, and then we go down for a 5. So this would be an alternative. This is what I would refer to as a bearish alternative. Not saying that this is what's going to happen, but I have to be resilient enough to recognize that there is something going on here. And if this is the case, let's just stay with the red here as our alternative. We could be working on an A, a B, and a C to finish that wave. Now again, this is, not set in stone, but this is just an alternative that we need to watch and we need to keep an eye on. And certainly we could be working on, a last wave up here. We could go just a little bit higher, peak up a little bit, maybe hit this 211 level. And that 211 level, I'm going to base off of this right here, right? So it's very possible we do go up here to about that 211 level. That's going to be my bearish alternative. So that would finish wave C, which would finish wave 4, which means we would be going down for wave 5. Now, if we don't do that, right, if we do have the bullish count, which would be my primary at the moment, we do have to count this. We would have to force this as a wave 5. So if this is a wave 5, that would mean that we completed a WXY pattern, right? So this would be our bullish alternative, okay, with a 5-3-5. All right, so we've got here from the top, we've got a nice A and then a B, and then we complete the wave C, right? So this again, this would be our bullish alternative. I'll go ahead and label this green because this is our bullish. We've got a bullish alternative here that an A, B, C correction is complete, and then we move up and out from here. Okay, so if we do have something like this, what we're looking for is, at least, we've got a nice 1, 2, 3, 4, 5 waves up, A, B, C down. So this would be either an A, B for the bearish alternative or a 1, 2 for the bullish alternative. Now, as I was stating in the Discord earlier today, you do have to keep in mind that any time that you have a big significant move to the upside, you have to remember that there is potential that we could reverse at any time. So you have to be very careful with that. So let's go ahead and take a look at this from that bullish alternative. How much higher can we go if we do have a wave 3 on our hands? I'm going to use my trend-based fib extension tool to pin the bottom of this, to pin the top here, and nice A, B, C pullback right here. All right, so a wave 3 target. Let's talk about all these targets, right? The bearish target would be somewhere between 209.79, and I would not want to see it go above 214. Because that would violate wave 1. And if this is wave 1 right here as our bearish alternative, we can't violate that, right? We're getting close to violating this. This level right here cannot be violated. If we're going to remain bearish, that level is a no-fly zone. We can't go above 212. That would really invalidate things. So naturally, looking at this, moving up to, about 211, and here would be completion of our wave 4. But if this is a 1, 2, let's go ahead and put this in here now. If we've got a 1 and a 2, we'd be looking for wave 3 to come up here at about 224, do a wave 4 pullback, and then we go up for wave 5, which would take us almost all the way back to new all-time highs. I'm going to change this color to green because, again, this is our bullish alternative, right? Again, you can count nice, clean ABC out of that. And then from here, 1, 2, 3, 4, 5, again, ABC to finish that. And then we are working on a little 1, 2. And let me go down and dig just a little bit deeper. I'm going to go to a 15-minute here just so that we can look at this with a little more clarity because, it is pretty clear that we've got a few things going on here. So from this 2, we've got a 1, 2, 3, a deep 4, and then to finish that wave 5. Okay, this would be, of course, on a lesser degree, right? From here, from this wave 4, I could count 5 waves up here. But on the pullback, okay, let's just take a look at the pullback for this ABC. So right here, we've got a nice little A, B, C. It works pretty well. So let's go ahead and put this on a lesser degree. This is how things start to come together. What did we have yesterday. We had a nice clean ABC on a lesser degree yesterday. So let's just pay real close attention to that. On the smallest degree, we've got a nice little ABC after a larger ABC. So this looks, this looks pretty constructive. Okay, so if this is a 1-2, okay, so let's go ahead and look at this. From this wave 2, if this is a 1 and then a 2, well, we would be expecting a 3, 4, 5 to come shortly thereafter. Okay, so let's just look at this. We've got a potential for a 1, 2, 1, 2. Now this, of course, is the bullish alternative. This would be what we would need to get us up here to our target of roughly 224, 225. That would be what takes us up to that wave 5. I'm going to raise this up a degree so there's no confusion. So that would be what our bullish alternative would look like. So this is what I've got on Russell right now. I'm going to go to a 30-minute and I'm going to zoom out just a little bit so you can see the roadmap that is potentially here for Russell. We've talked about the bearish alternative. If we're talking about risk versus reward, you can totally get long on Russell. Even though we've got a gap up today, we're gapping up very close to the high from the 22nd. But if we can get up above that, well, that's really great. But I would be looking for a hedge at some point here around that 211 mark. Again, watch to see what happens at 209. I think if it breaks 209, more than likely it's going to get to 211. But then you've got a really, actually, a decent short setup, if I'm being honest here. Because look at your risk versus reward. Okay, so if you do happen to get a short at 211, we don't want to see our wave structure go above this 213 level, right? Give it a little bit more, right? But you're looking at a pullback to potentially down here at about 199, maybe going back down to 200. So that's a 7.3 to 1 ratio, which is really not that bad. You're talking about less than 1% of a risk on a hedge trade here for potential 5.54%. Now, if you find a leverage asset for IWM, let's say it's a 3x bear asset, you're really only talking about a 2.4% loss for the potential of a 15 to 17% gain. That's really not that bad in the grand scheme of things. So that may be something that I am interested in taking is a hedge. Now I'm long on IWM. I've been long on IWM for actually longer than probably I should be. I've been long from all the way back here. But, it is what it is. And, again, kind of going back to the structure here, we had talked about this several months ago about how IWM has been kind of working with liquidity pools. So let's just take the top here and then the bottom here, and let's just take a look and see what IWM has really been doing. I think our primary levels are actually going to be somewhere along the lines of about right here. Okay, so every time we have gone into a liquidity pool, we have seen a reversal to back to the median, right? So liquidity pool here, huge liquidity pool up here, and then of course we've seen the same to the downside. Liquidity pool here and here, here and here, also here, and now we've got this huge liquidity pool that we have been experiencing. We've got a huge liquidity pool that we have been experiencing here to the downside, ever since we broke down in early January, mid-January. So now that we're here, we've got two scenarios here. We're basically right at extremely important resistance. So again, we're talking about a hedge short. If the main count, the main bearish count that I've got here, so our alternative, if this plays out, our downside target, let's just go ahead and humor that for a moment, because there is potential that this may be what's occurring here. So we've got a 1, 2. We'd be looking for a move down here to about 170. We'll call it 180. 180 would be the ideal place. So, I'm not sure if you want to hold on to something that long, because again, this could take a long time to work out, and where options may not be the best play, right? Unless you get a leap style play. If you really think the market is going to drop that much, I tend to believe that a nice conservative hedge here in this area will probably yield some gains if it rejects off that level and pulls back, right? So we're looking at 209 being important, but that 211, also the bottom of that liquidity pool, there's just a lot of resistance here. But I'm telling you right now, if it breaks through 212, 213, if it breaks through that level, it's more than likely going to go back at least to the median, which is right here at about 220, but more than likely it's going to go to 222 to 224. So watch out for that. Keep an eye out. This is, obviously two ideas here. One is bullish, one is bearish. I'm not saying anything with any amount of certainty, but what I can say, again, this is just my opinion. I'm long, and I'm looking to get a hedge short position. Now, I'm not going to get too deep into what that means, but just keep in mind that in a hedge position, say that I've got, a decent amount of profit in IWM. Let's say I have $1,000 profit in IWM right now, and I think that there's potential that it might pull back. What I would be looking to do is capture a trade that I'm not going to let go to zero, but capture a trade that's going to reduce my drawdown if it pulls back. Now, I'm not going to put $1,000 into a trade. I'm not going to put $1,000 at risk if I'm at $1,000 in profit. I may put $100 at risk for the potential that it could return, maybe, $100, $200, $300 if we get a pullback. And if I get that pullback, my $1,000 profit may reduce to maybe $500. But if I pull $200, $300 profit on a hedge short position, well, in actuality, I really only lost $100 or $200. So that's what a hedge short position is. A lot of times you'll hear people say, yeah, I'm hedging. Most of the time they don't actually know what that means. They just say that I'm hedging because they don't really know what they're doing. And what you're looking to do is to maintain your long exposure, but to reduce your risk by getting a shorter term short position that will profit on any potential pullback, and that will reduce your drawdown on the long position that you have. So you maintain that long position, you don't close it out. Very similar to, getting covered calls, right? It's a very similar situation. You're selling covered calls to make a little bit of money in the event that, the market doesn't do anything or it pulls back a little bit. You try and capture a little bit of profit. I mean, why not? Would I get covered calls here on IWM? I mean, yeah, I would probably, if I had a few hundred shares of IWM, I'd be looking to sell maybe 214 calls. If you bought here at 208 and then you sold like 214, 215 covered calls in IWM, well, if it goes up past that, well, you still made money. If it pulls back, well, what credit that you received by selling that covered call is going to reduce the loss that you would incur if IWM does pull back. But you're still maintaining your long position. You're collecting the credit. And heck, depending on how many shares and how many that you sell, you may actually be able to buy more shares at the end of the day, depending on how far out you go. I'm not going to get into options or anything. I'm just going to talk about, just a strategy. I'm not saying to go and sell 214 covered calls, but really, if you go and you sell 214 covered calls on IWM, if it goes up to 214, you make money. If it goes down, well, you didn't lose as much. But you still have to, weigh the risk to reward on that. So I hope this video helped you. I wanted this to be a little bit more of a working session versus, me just kind of just rattling things off. I wanted to show you kind of how my brain works when I look at both scenarios. So I hope this helped. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. If you need access to our Discord, you can find all the information on BitDoctor.org, where you can get access to education, to trade ideas, to our advanced trading strategies, where we're trading spreads, futures, we trade options, single leg options. We've had some really great trades over the last couple weeks here. And we have a promo code March Madness to get $100 off your first month if you're not a member. And of course, last but not least, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.